You ever worry about getting one of those scam calls and just watching money disappear from your bank account? It's pretty much a modern-day nightmare. Well, a recent landmark Supreme Court case has totally redefined who's on the hook when that happens. So let's break this story down, because trust me, the outcome affects every single one of us.
It really is the million-dollar question, isn't it? Or in this case, the 94,000 rupee question. When a scammer gets you and your account gets drained, is that on you? Or does the bank actually have a responsibility to protect you? For the longest time, that answer was kind of murky. Not anymore. So our story kicks off, as they so often do, with a simple, unexpected phone call. And this is where we meet the person right at the heart of this entire legal fight.
Meet Pallav Bhowmick. He's just a regular guy with a savings account, nothing unusual. He was actually expecting a refund from something he'd bought online. Then he gets a call from someone claiming to be from customer care, offering to help him out. It's a situation that, honestly, anyone could fall for.
So, following the scammer's instructions, Mr. Bhowmick installed a mobile app, and pretty soon after, a bunch of transactions just drain his account. But here's the kicker. The most critical part of this entire case, he realized what was happening and reported the fraud to his bank within 24 hours. He did everything right after the scam happened.
So what was the damage? A whopping 94,204 rupees. Gone, just like that. For most people, that's a huge, huge financial hit. And since Mr. Bhowmick reported it right away, he expected the bank to step in and help. But that is not what happened.
Instead of getting a refund, Mr. Bhowmick got a flat-out no. And this is where the real fight began, setting the stage for a legal battle that was going to go all the way to the top.
Suddenly, you have two totally opposite stories. On the one hand, the customer is saying, look, these transactions weren't me, and I told you immediately. But the bank story was the complete opposite. Nope, this was the customer's fault. He was negligent.
The bank's entire argument basically boiled down to this. They claimed Mr. Bhowmick must have shared his secret info, like an OTP or a PIN. They put the blame squarely on his shoulders, saying he was negligent, and because of that, they weren't responsible for the loss. But they had one tiny problem. They couldn't actually prove it.
Okay, this is the moment where the whole game changes, because this fight isn't just one person's word against a giant bank's. No, there is an official rule book that governs these exact situations, and it's written by the Reserve Bank of India.
You see, way back in 2017, the RBI issued the Circular on Customer Protection. You can just think of it as the official rule book for banks. And this isn't some friendly suggestion. These are mandatory regulations that every single bank in India has to follow. It was designed specifically to clear up this exact question: who pays when there's fraud? The heart of these rules really comes down to timing. The circular creates this amazing category called zero liability. Now, what this means is that you, the customer, pay absolutely nothing if the fraud was the bank's fault, or, and this is the important part, if it was a third-party scam and you report it within 3 working days.
So let's be super clear about this. Zero liability is your shield. If you report a fraud fast, the default position, the starting point, is that you are not on the hook for that money, unless the bank can prove with actual evidence that you were the one who was careless.
And look, these rules aren't a one-way street. They put very clear, non-negotiable duties on the banks, too. They have to provide things like instant SMS alerts for every transaction and have 24/7 channels open for you to report fraud. Protection is a two-way street.
So, armed with these RBI rules, Mr. Bhowmick took his case to court. The legal system was now on the clock, tasked with applying this official rulebook to a real-world financial nightmare. And you know what? The Guwahati High Court sided completely with him. They confirmed the transactions were unauthorized and that he reported them promptly, checking all the boxes in the RBI's rules. But the most important thing they said was this: the burden of proof. It was on the bank to show he was negligent. And the bank? It had zero evidence to back up its claim.
You'd think that would be the end of it, right? But no. The bank just wouldn't give up. They refused to accept the High Court's decision and decided to take it all the way to the highest court in the country, the Supreme Court of India. The final showdown was officially on.
And the Supreme Court's verdict? It was swift, it was clear, and it was final. They threw out the bank's appeal. By doing that, they basically stamped their approval on the High Court's logic and sent a massive message to the entire banking industry.
So, what does this final verdict actually mean for you and me?
This wasn't just a win for one person. This was a powerful moment that reaffirmed the rights of every single person with a bank account in this country.
The Supreme Court's decision basically carved the RBI's customer protection rules into stone. They're not optional. They're not a nice to have. Banks cannot just ignore them or try to create their own internal policies to get around them.
When you boil it all down, this one case gives us 4 crystal clear legal principles. 1. Zero liability is the default rule. 2. The job of proving you were at fault is on the bank. 3. They can't just blame you. They need actual evidence. And 4. The RBI's rules trump everything else.
If you remember just one thing from this entire explainer, let it be this. The second you report an unauthorized transaction, the legal burden shifts. It is no longer your job to prove you're innocent. It becomes the bank's job to prove you were negligent. That is a massive shift in power.
The ripple effect of this decision is huge. For all of us as customers, it means we can use digital banking with a lot more confidence. For banks, it's a flashing red light telling them to get serious about their fraud detection. And for the law, it's just a massive win for consumer protection.
So, at the end of the day, this case empowers all of us. The next time you see a suspicious transaction, you know the law says the responsibility is on the bank to prove you were at fault, not the other way around. Which really just leaves us with one final thought. You know your rights now. The real question is, does your bank?